The answer is no, and that has to do with the way we manage money. We're firmly bottom-up investors. We don't sort of spend. We don't think we have an advantage within the domestic equities team in terms of trying to forecast inflation. What we do well is select good companies within the universe that's our ethical universe, and we've been able to do that successfully through time. So our strategy really is just to keep finding sustainable business models that we understand and that we think are priced at the right level. So I mentioned a few names before. A company like Cochlear, it's obviously trades on a higher PE, but it's been sold off more recently. But it hasn't done as well as some of those healthcare names over the last 10 years. We continue to own the stock. We've been adding to that position to some extent. It's got net cash on the balance sheet. In a funny sort of way, it's almost a play on reopening because it's been under a bit of pressure, because some of the COVID impact on their procedures. And so, we can find companies that are very conservatively geared like that, or like a Blackmores or a Ramsay Healthcare, which has a big book of property. And again, it's more of a reopening play. Some people may think of those companies as growth names, but we think they're really established franchises, and we're happy to add to them on weakness. I think what we're seeing in this sell-off is the market becoming more discriminating. But it's really the first stage of that process of discrimination, where it chucks out whole groups of stocks, that either the market decides are correlated with or not correlated with an inflationary environment for whatever reason. So that always presents opportunities, right? Because it's a very kind of broad brush approach. On balance, it's a good thing that that the market's discriminating. Through time, it throws up opportunities for active managers. Look, a company we're really interested in, and it's been quite volatile, is PEXA. Some people might see that as a high growth technology stock, which I think it is, but trading on a very high PE. But we see that as a company that's in a very early stage of its growth journey, with significant optionality overseas, and an incredibly robust business in Australia with those sort of platform economics that we really like. So that's the kind of company where we see volatility that we've been happy to add to.